All right. Great. So thank you so much, Mr. Sudhin Barkar, for joining in. This is a part of Zubi, and we do this every week, and we invite emerging technology leaders, business professionals, startup influencers, and many more to talk about emerging technology. And today we have a very interesting topic to talk about digital transformation. And thank you for joining in. And of course, you have been a humble innovator, my mentor, my friend, and of course, a very interesting professional who have started his career in banking and now is helping budding startups and millennials to succeed in this era of digital transformation. So, quick introduction about you would be helpful for our participants.
Sure. Thanks, Aman. So I'm Sudhin Baraukar. I've been in the ID space for more than 2 decades, having been head of innovation at State Bank of India and Barclays, and senior IT roles in IBM and G. Today, I advise the world on emerging tech, as well as I'm a founder in 2 deep tech startups, and have continued to mentor organizations, startups, and the academia. And I think the next 20 years, I will continue this focus on innovation, deep tech, and emerging tech.
Great. So, Sudhin, of course, there has been a trending meme that most of the companies have moved towards a digital transformation because of COVID. So, I just wanted to understand, what does this term mean actually, digital transformation? Is it equivalent to digitization, or there is a thick line or thin line or some kind of a difference between that?
So let me explain it from a very basic point of view. So typically in organizations, we run in 2 modes. One is run the organization and change the organization. And when we say run the organization, it means, for example, in banks, and I've worked in large banks, it means that running the core banking, running the payments, running all the transactions, the mission critical services that we serve to millions of customers all over. And the change side is basically the transformation side, where we look at emerging tech, deep tech, go digital kind of initiatives, so that we can deploy, we can evaluate and deploy these great innovations that are happening. And at this stage, they're happening at a very, very quick pace. And then utilize them so that we can help customers save, we can help the organization save costs. We can have a better customer experience and a better digital experience with our customers. So the digital part is on the change side, where we want to modernize, we want to improve, we want to optimize, we want to transform using the best of technologies and innovations that are available.
All right, so interesting. So I'll come back to this point which you have made. But if you look at, we have evolved from Industrial Revolution 1.0 to 4.0 right now, and we are certainly moving towards 4.1. And there has been a time where VCs used to consider cloud-first companies. Then came a time with the mobile-first, that if you have, because of the increasing demand and adoption of mobile phones. And now this is a time of AI first. Right. So I want to have your insights and perspective on this. Like, what's going to be the next trend, whether it will be a crypto first, whether it will be a platform first, whether it will be a fintech first, or some kind of other combination. And what do you think about this AI first businesses which we are going, or which we are experiencing in this point in time?
No, that's a great question, because AI. So just let me demystify AI. So even like for VCs, if they don't know about AI, let me just demystify it. So the first AI was built around more than 100 years back in 1914 in the form of an autopilot by a company called Honeywell, right? And that same autopilot today has been deployed on all the commercial planes and other planes, and it has saved so many lives, right? So this autopilot can take over the plane and can fly the plane without the intervention from the pilot, right? So AI has been there for a very, very long time. And it's just that today, with the explosion of big data, with the explosion of cloud, with the explosion of mobile technologies, end-use devices, is just now being adopted at a much more massive scale than what it used to be previously, right? So I would say that AI first is something, I would say AI and ET first, emerging tech first strategy, is something that we need as individuals to adopt, as well as for the organizations to adopt, because this is not the future. This is what it is going to be, right? And one of the most important parts where this disruption, how AI is going to create disruption, is the move from domain expertise, right? So whether it's banking or manufacturing or healthcare or whatever it is this massive shift from domain expertise to deep tech expertise. And that is, as we see it, it's happening. It's started to happen. It's happening right now, and that is a future where we will see, just as cars drive by themselves, and we've seen a lot of tests on that. I think even the entire banking systems, a lot of industries are going to go completely automated and autonomic. So AI is going to be, and what we are seeing is, just even if you haven't started your journey on AI, especially for the younglings, I think it's just started. So it's not you're not going to lose too much time over it, but the way it's going to amplify and scale up is going to be it's going to be on a very massive scale.
No, absolutely.
No,
There are
absolutely.
definitely
There are definitely
new businesses of AI which are coming up. But if you look at over a period of time, there has been a significant shift in the banking sector as well. Like in the last 2 years, like my father used to go to a bank very often. I possibly have not been to a bank. Now if you look at even in the other industries like healthcare, now healthcare has left the buildings and came to your house, where you can interact with the doctors through your mobile phones. And banks are of no really much of a significance. Banking is more flourishing. So I was also reading about that every company will be a fintech company as we go further and as we go forward. So what do you have to say about it? And of course, you have been working with a lot of interesting companies in emerging technology, deep tech as well. You would like to share some of your experiences and insights that if every company will be a fintech company, then all of us have to start transforming from today itself.
No, I would say one thing that banks have really done well in this space is the fact that they have taken the risk and actually been the front runners in terms of emerging tech and deep tech. And even today, I can tell you most of the large global banks are keeping this as a focus. The reason is that it's not that we have so we want to merge all this digital part and this emerging tech aspect with the run side of it, right? So let me give you a live example of what we're doing, right? Especially from my experience in State Bank of India as head of innovation out there. So we are core banking systems. Our core banking systems have been benchmarked at 24,000 transactions per second, or approximately 1.5 billion transactions a day, to serve more than 400 million plus customers and 600 million plus accounts. This is the most complex, scalable, advanced core banking system in the world, made in India by Indian technologists. Right? So all this infrastructure, all this digital infrastructure, all these innovations that we put are serving us remarkably well in this period. And that's the reason, because we took the risk. We farmed out a separate innovation competency. We got an innovation leader, and we made sure that the best way to serve our customers would be using these digital technologies. And today, if you see, in 2018, we launched our YONO, which was You Only Need One. It's like a banking in a box, or mobile banking in a box for millions of customers. So we are having this complete contactless kind of interface and giving them the benefits of that digital experience and customer experience, right, through the app or through even the bots. In 2017, we launched 3 bots for our website and for our internet banking and for some of our applications. So I think this entire investments by banks into taking the risk, going for the innovation agenda, can be replicated by other ecosystems, right? It can be replicated by manufacturing. It can be replicated by many other industries because we are extremely successful with this, right? We took it as a risk. Definitely, there were newer technologies, so we had to build up the skills. We had to make a large amount of investments in whatever we as infrastructure investments as well as application development, investments. But we are, with great pride, I can tell you that this risk has turned out very well, and especially for a country like India, where the focus over the years, last so many decades, has really not been on innovation and risk taking. I think that needs to come in, and that needs to be across the entire ecosystem.
No, I agree. So you talk about banks. See, I definitely love banks, but with banking, my interests have started changing over a period of time. But with banks, there are certain challenges as well. So then I'm sure you have looked at very closely when you have been working with banks over a period of time. One of the challenges is, of course, the data privacy. And recently, if you look at in February itself, 460,000 credit card details was up for a sale on dark web, and each credit card detail was sold about for $9. And when it comes for a KYC point of view as well, I have to provide a lot of information to open up a bank account. And similarly, if I open up another bank account with some other bank, I have to provide the similar process, and I have to go through the same process again. Don't you think it's tedious and it's loss of efficiency, and the process is getting repetitive as well? And once I move out of the banking ecosystem, I don't really have the complete visibility what's happening on my identity. So these are the certain questions which I wanted to put across in front of you, since you have worked for many years with banks, and I wanted to have your perspective. Like, where do you see that with digital transformation, these things gonna change over a period of time?
So great question, Aman. The thing is that there is a misconception that emerging tech and going digital actually, the security is not covered, or there could be more fraud, or the accounts could be hacked more. I think that's a complete misconception. I have seen from my experience that going digital and using emerging tech, in fact, has increased our governance, risk, and compliance in the bank. Right? Now, you can say that, yes, there's a shocking figure that the total amount of fraud in the banks has been probably 1 lakh crore last year, and this is in the public domain. I think the reason being that a lot of it could be attributed to offline transactions. A lot of it could be attributed to manual branch transactions, but very few of it is actually digital transactions. And the reason is that we made a lot of investments, especially in security. So we've brought in MFA, multi-factor authentication. Then we've also inserted the JAS piece of it. So JAS is into all applications. So JAS is, we've invoked the JAS. JAS is basically the Java authentication and authorization services. We've also made a lot of analytics and AI-driven kind of business rules, which are based on the usage of that particular credit card or the ATM card. It could the system could try to stop this. So if, like for example, if most of the time I'm in Pune, and let's say there's a card transaction that happens in Bangalore, then the system would be able to stop that transaction looking at the machine learning data. So there is a lot of security features that we have put in. Obviously, that's very critical to the bank because the regulators are very focused on this, and we do give them a report, every as per the cadence. So we are doing a lot. I do confess that still a lot remains to be done, but I think as we further go digital and further use emerging tech, especially usage of AI for some things like adaptive security, which is coming in. I think over a period we will probably become even more secure and make sure that our customers do not face any security threats or any data hacks. And we are also aligning to the latest of GDPR standards and related standards issued by the regulator from time to time. So there's a lot of work being done with the knowledge and validation that in fact going digital and using emerging tech has helped us improve the audit, transparency, and the compliance of a lot of our banking transactions and processes.
All right. So before I shift to another topic, I wanted to understand. See, if you look back, it used to be hard to start a software company 10 years ago. You used to have multi-million dollars of investment and months to deploy. And with AWS, things have changed. With 1 day of deployment, you can open up a software company possibly in less than $100. And if you look at the digital and the online banks are also coming up. In this term, it's called neo bank. I'm sure you are aware of that. Also known as online bank or internet only bank or digital bank. For somebody to start a new bank or a digital bank, like it used to take a lot of questions, licenses, compliance, that I am starting a bank like SBI, Kotak, many years back. But now with the digital trends which are picking up, a lot of online banks for neo banking which are coming up. So would you like to share some thought process, like what does it take to start a neo bank, and where do you see the future of neo banking as we go further?
So there's a lot of scope and opportunity and potential in neobanking. The reason being that typically when we look at the operating costs of big banks, legacy banks or large banks, it's nearly 50 to 70%. And that's massive, that's huge. This is because of the cost of branches, employees, investments in technology and all that stuff, right? But if you look at a complete digital bank, a neobank, as you rightly described it, I think that operating cost really is between 20 to 25%. So so if you're able to control these costs, you can really make a good amount of money if you can control these costs. Definitely. The problem is about the regulations in India, right? So that is one thing that you have to really, the startup or the fintech has to really figure out, that how far is, so yes, it's great to use the emerging technology and to do this new banking, that's great. But you have to also read as to how far is the regulator really wanting to support these new digital banks, right? So that is something, because some countries may be more ahead of the curve. They have seen this digital banking ecosystem expand and do quite well. I think in India it's going to take some more time, because we have seen lately a collapse of some banks, right, for whatever reason, and that puts a kind of a spanner in the works in terms of in terms of this neo banking or digital banking. But I think over a period, if we look at the overall cost structure, I think there's large amount of potential and opportunity. There's also potential and opportunity for startups to probably not really become banks and pay that license fee and have that capital, which can be quite a lot, but to probably partner with existing banks, build up these. So, for example, for something like financial inclusion, you can build up a financial inclusion digital network, right? Use the greatest of innovations and come out with a far less operating cost model than what banks have, and offer this as a partnership with banks. So that is one model which can do. I think in terms of in terms of whether whether these new banks will rise, and I think maybe right now, maybe this particular year post COVID may not be the right time, but definitely as the economy recovers and does well, probably a better time, because what we're seeing now is a perfect storm. We are seeing that the interest rates coming down and the credit risk going high, right? Now, if you're a big bank, right, well capitalized, having a very big franchise, then you're able to survive this storm because you've got enough liquidity and all that stuff. But if you're a small bank or a small NBFC or maybe even a small digital bank, you may not be able to have the resources to, for example, extending this moratorium from 3 months to 6 months, right? Big banks can do it. They won't take that much of a hit. But for a small bank to do that would be very difficult. So I think it's probably the shift would be to probably look at what's running in the ecosystem, like for example supply chain financing. That's something that is running today. There's a lot of investments in the agri-tech sector. So whether these new banks can service that sector. So the new banks will have to make a choice of what they really want to service, because the real sector will still take some quarters to recover and then further revive and take it ahead. So there are challenges. I think there could be a greater support from the regulators and authorities to get in models which are less on the operating cost, which could really benefit society, and the cost of transactions could also come down. So that could be another incentive for fintechs. But right now, I would say a lot of the fintechs are in challenging times, and they will have to just survive and ride out the storm.
So, I mean, you talked
You
about
talked about
neobank
neobank
license and all.
license and
So
all.
neobanks
So
don't really
neobanks don't
require
really
bank
require
license of their own, or they depend on some banking partners to provide bank license as a service. Am I correct?
So you have to register. So if you don't take a position, so if you don't finance, if you don't lend the money directly, right, then you don't require a banking license. But at times you can get registered as an aggregator. That's a much lower fee to do that. Or you could partner with a bank and become their kind of a new bank or digital bank kind of partner, and then build a network. Yes, the cost of a bank license, even if you have to register as a payment bank license, is quite high, and we've seen limited success of payment banks. And I think in this environment, I don't see the authorities or regulators kind of incentivizing newer banks to come in, because it's a tough environment. Maybe next year, when the storm rides out, it could be a better chance. But I see that partnerships and collaborations with probably existing players, it could be banks, it could be NBFCs, it could be financial services companies, it could be credit card companies, is probably the best way out for fintechs and startups.
No, absolutely. As the financial landscape is shifting towards customer experience and satisfaction, I think the neobanks will fill this gap by having an attempt to solve the customer focused problems. And definitely it becomes a hassle-free account creation, seamless international payments as well, with millennials picking up. They have their friends across the globe. And of course, user-friendly interface, smart reporting, and other things. So then you talked about financial inclusion, and if you look at India being a country, 190 plus million people do not really have the bank accounts. And if I just can talk about financial inclusion for a minute, because of course you would be talking in detail from your experience, financial inclusion is nothing but defined as the ability to have the opportunity to access the financial services. And 190 million people do not really have the financial access. Either they don't have a bank account or some basics services which they can avail in terms of a loan, equity, insurance products, or the other things. Do you see the emerging technologies like blockchain can fill this gap and can provide an opportunity wherein each one can have a bank account, possibly through a crypto wallet app or something like that? I think we'll wait for Sudhin. Possibly he's got disconnected. Sudhin, are you there? Hi, Sudhin. All right.
Yeah.
So I'll repeat my question. Of course, did you hear me till neo banking?
Yeah.
All right. So my question was, since you talked about financial inclusion, and India is the second largest unbanked population in the world, and if you talk about financial inclusion, it's defined as the availability and equality of opportunities to access the financial services like banking, loan, equity, and insurance products. And India is a country where 190 million plus people do not really have the access or awareness towards the financial product, or even do not have a bank account. So, do you see the emerging technologies like blockchain can fill this gap, where each one can have the bank account or possibly an account through crypto wallet app or something like that?
So yes, we have been using a lot of the emerging tech and go digital for CX and DX. But when it comes to banking, banks, we make money on lending, right? It's very clear. That means managing risk. And yes, for a country like India, in fact, it's a very unique country from a financial inclusion perspective. We have built this Jandhan or the JAM trilogy, as they call it, or the Jandhan accounts, the financial inclusion accounts. But and the reason we did that is that because the people who really need the money are not getting the money, right? And the people who have got the money, some of them are not returning the money, right? So this is a condition actually really apt for financial inclusion, and I think it's probably you can definitely use AI, you can definitely use automation, you can definitely use blockchain. Crypto, as of now, crypto is still not, allowed in India for whatever reason. I think we have to definitely look at that space. But I think, just to give an example of, the cost savings that we can do. So in 2017, there was a report generated by the banks, which was made public in the parliament, and they said that we have spent thousands of crores just operating the Jandhan accounts, right? Uh, it means that you can definitely use blockchain and DLT systems to, in fact, help reduce the cost that it takes, right? So, especially for Jandhan accounts or financial inclusion accounts, where the balances could be anything between, 0 rupees up maybe up to 10,000 rupees or 20,000 rupees. So
Sudhin, are you there? Can you hear me?
Yeah, sure. So sorry about that. I think network issue. So in terms of, I think, so in terms of emerging tech, definitely there's a lot of, I think emerging tech is ideally suited and aligned to emerging models. I think financial inclusion, especially for India, is a very important emerging model that needs to be addressed. I think a lot of the technologies can be used. Blockchain can be used. AI can be used. Digital wallets can be used. Payment infrastructure can be used, and we already have a lot of payment infrastructure and channels and options. I think in terms of crypto, it will take some time to adopt more. The reason being that first of all, in a country, such a big country like India, people don't have enough of fiat currency, and then we're talking about crypto. So I think it'll take some more time for regulators. I do confess that in some other regions and countries, the crypto adoption has already started. But I think in such a big country like India, it'll take some time. But definitely, use of these emerging technologies can be very well suited for emerging models.
All right. So if you look at
All right. So if you look
uh,
at
China's growth and China's mobile payment ecosystem, and it's largest in the world, and it's only built on QR codes. I happened to talk to a friend who visited China, so he said I have to, in a day, I've had a chance to possibly use QR code 43 times. You can do it for meeting and flirting online at the bars. You have to do a tipping for bar staff and musicians. You can do it through QR code. You want to track your food from farm to grocer. You can also do it through QR code. Similarly, there are a lot of things which have started picking up on QR code, and we have seen the Paytms of the world, and Paytm definitely in India have seen an uphill kind of a growth. So where do you see the future of QR codes, and do you see there are some challenges with the QR code uses and adoption, and possibly the emerging technologies can fill this gap?
No, I think the demonetization. What happened was a very good push for the digital infrastructure and digital payments, and at that time there were a lot of QR code kind of based applications also. I think probably there should have been more incentive given for digital infrastructure and payments, and it still can be done. I think if that can be done, then the entire, and especially in a post-COVID world where it has to be contactless, there is no other option. I think a lot of these so we have the applications, we have the infrastructure. It's just the matter of time. Is just probably if it becomes a little more incentivized for the for the customer as well as for the merchant provider. I think if it becomes more incentivized, I think this can only just happen. In terms of
Then I think my apologies. Would you mind if we conclude this and possibly take it over audio or sometime as your connectivity is good? Because there's a lot of lag in between, and also you are dropping off. Apologies for that. I understand there is because of the storm and cyclone, there could be possibly internet connectivity issue. What do you think about it?
So I think QR code is a great technology. It should expand its scope. I think further push both sides, further incentives, further applications can really help take it to that level as what China has. I'm sure that we can do it with the infrastructure and the applications that we already have invested. So banks have done a lot of investments. There are a lot of startups also who have come up with the QR code technology. So it's just a matter of time. But yes, at this stage, I would think that China has probably a little ahead of the curve than when it comes to India, at least from a QR code perspective.
So then my apologies. I think because of the internet connectivity issue and your video is also lagging, possibly we'll have to conclude this, and maybe I'll take it the further conversation on podcast or possibly on audio call. And because
Sure.
of the storm and all, we definitely understand because there could be some connectivity issue. Sorry about that,
Sure.
and apologies for the inconvenience. And thank you so much for your valuable insight. I personally get to learn a lot. There are some of the interesting questions which I wanted to ask you in terms of financial inclusion, emerging technology, and digital transformation use cases in each of the industry. I think we'll take it over the audio call. Thank you so much, Sudhin, for joining in.
Sure. Thanks, Aman, and thanks to the Zubi team. Thanks.